investors, welcome back to the channel. I'm Mitali Thoke, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. Every big company was once a small cap, and that's exactly why this space excites long-term investors. But are small cap mutual funds still worth investing in after the recent market correction? India's small cap space, once the star performer of the equity markets, is now facing some serious heat going through a period of stretched valuations. Following a spectacular rally in 2023 and early 2024, the space is now indicating a slowdown. Nifty Small Cap 250 Index, which registered significant returns in the past year, has now become volatile. The index witnessed a sharp rally between April and September 2024, peaking around 23,460. But what followed was a steady slump, with the index plunging to a low of 17,405 by March 2025, wiping out a significant portion of the previous gains. This nearly 26% correction reflects how brutal the recent volatility has been for small cap investors. As the market shifts gear in 2025, rising volatility and broad-based corrections have started to spook investors. In spite of the recent downturn, the long-term structural story for small caps remains intact. However, regulatory concerns about stretched valuations and a crowded trade in high-quality small cap stocks has caused fund managers to change strategy from active accumulation to selective value-driven investments. At this juncture, investors should embrace a methodical long-term strategy. All small cap funds are not worth risking your money on. Diligent comparisons are required to gain maximum benefit from this high risk, high reward category. Here are the top 3 small cap funds that have performed well in terms of consistency, risk adjusted returns, and portfolio quality. Number 1 is the Nippon India Small Cap Fund. Launched in September 2010, Nippon India Small Cap Fund is among the oldest, best known, and high performing small cap funds. It has an AUM of Rs 580.28 billion. This fund has attracted considerable investors' attention with a strong long-term record and seasoned fund management. It focuses on taking advantages of the growth potential of undercovered and emerging businesses across sectors. Its bottom-up stock picking strategy with a diversified portfolio of 100+ stocks helps to minimize risk in the volatile small cap universe. During the past 3 to 5 years, the fund has produced spectacular returns, beating both its benchmark as well as category average consistently. The fund has been able to withstand market corrections and capture good upside in bull markets. Nippon India Small Cap Fund's largest holdings include a combination of large cap, mid cap, and small cap shares. It has limited the allocation in each share to less than 2%. The fund's top stock holdings are HDFC Bank Limited at 2.20%, Multi-Commodity Exchange of India Limited at 1.95% and Dixon Technologies India Limited at 1.33%. The top 3 sectors are capital goods at 11.98%, healthcare at 8.24% and chemicals at 7.67%. Looking ahead, this diversified portfolio with large exposures to industrials, consumer cyclicals and financial services makes it poised to benefit from India's growth. Overall, Nippon India Small Cap Fund is a strong contender for wealth creation if investors are willing to endure volatility and remain invested for 5 to 7 years. Second is the Bundan Small Cap Fund, which seeks to build a well-diversified portfolio of small cap equity with a prime focus on quality, growth, and valuations. The scheme was rolled out in February 2020 and it has a corpus of Rs 102.44 billion. In a comparatively shorter time frame, the fund has gained momentum rapidly because of its impressive performance. The fund's top stock holdings are Shobha Limited at 3.13%, L&T Foods at 2.38% and South Indian Bank Limited at 2.33%. The top 3 sectors are finance at 12.5%, healthcare at 12.7% and realty at 8.8%. Bundan Small Cap Fund has posted impressive growth, more so during bull market phases, outspacing the benchmark alongside most of its notable peers in the segment. The fund also scores high risk-adjusted returns as indicated by its information ratio and up and down capture ratio, which are currently among the best in the category. Information ratio indicates whether a fund outperforms its benchmark after risk adjustment. Higher values indicate consistent outperformance. Up and down capture ratio informs you about how the fund behaves in a rising and falling markets. Higher up capture ratio means better gains, while lower down capture ratio means better protection in downturns. The scheme carries a large portfolio of more than 180 stocks across various sectors. The diversified approach of the fund and its track record makes it an interesting choice for investors with a high risk tolerance and a long-term investment horizon. Third is the HSBC Small Cap Fund. The erstwhile L&T Emerging Businesses Fund merged with HDFC Small Cap Fund in October 2022 when HSBC AMC took over L&T AMC. It gained prominence for its robust performance during 2015 to 2017, which resulted in a significant jump in its AUM, which is currently at Rs 147.37 billion. The fund's top stock holdings are KPR Mill Limited at 2.38%, New Land Laboratories Limited at 2.13%, and Aditya Birla Real Estate Limited at 2.8%. The top three sectors are finance at 11.38%, healthcare at 8%, and capital goods at 7.6%. HSBC Small Cap Fund has provided stunning returns in the long run with a CAGR of 32.2% and 21.22% in the last 5 to 10 years, and surpassing this category average as well as its benchmark. With a Sharpe ratio of 0.28 and an up and down capture ratio of 1.14, the fund shows a fairly favorable risk-reward profile and excellent performance during market rallies. Rather than pursuing market trends, it invests in under-researched stocks with sound fundamentals, good management, and the potential to emerge as tomorrow's leaders. The bottom-up approach assists the fund to remain centered on quality small caps. With seasoned fund managers at the helm, the fund has enjoyed steady growth. Now to conclude, as the small cap segment moves from an era of exuberance to consolidation, quality and selectivity will count more than ever before. The long-term prospects of small cap stocks is encouraging, supported by structural trends in the economy and the growing role of emerging firms. Yet, due to the natural volatility involved, small cap funds are ideal for those who can bear short-term market turbulence and stay invested through market cycles. In this evolving landscape, a balanced approach based on discipline, research, and grounded expectations is the way to go. So if you found this video helpful, don't forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check out our related videos and articles linked below. And if you're new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, happy investing. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Registration granted by SEBI, membership of BASL and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.